Prashant, it's clearly been all about the money and money that's coming in from the global shores.
Absolutely, Rima. I mean, yesterday on this show at 11, we talked about earnings maybe broadening out. I mean, there are only two legs. One is earnings recovery, the other is liquidity. Some argue, bears argue that earnings recovery is not that strong. Liquidity is, it can come in, it can go out very quickly. So we're kind of trying to address both. Yesterday, we talked about earnings broadening in some detail. Today, let's look at the numbers, essentially the liquidity which is coming in. And let's just put the numbers up, actually. So if you look at emerging market ETFs, now the reason we are putting up ETFs as a separate category is because globally, it's the fastest growing segment. I mean, in India, all the money, foreign money that we get now, about 40% of it comes via ETFs. And it's got significant implications for the market structure. What kind of stocks get bought? What is the behavior of rallies? What is the behavior of sell downs? But that is a discussion for another time. So $500 million of inflow came into emerging markets yesterday. So this is the current latest data, $500 million. If you look at the last 1 month, $7 billion have come into emerging market ETFs. Now let's look at India funds. Now, most of the money that India gets, we get via global emerging market funds. India dedicated funds is meaningful, but I mean, in the larger scheme of things, it is one of the smaller categories, really. But if you look at this, and this is, I'm quoting EPFR, they aggregate information from all the funds around the world. India funds took in about $360 million of flows last week. Now, this is not money coming into the market directly. This is funds getting money, who will then decide where to actually deploy that money. Again, 40% of the $360 million came in via ETFs. The broader point that I'm making here, we put out the bigger number, the EM ETF, and then we looked at the India ETF as well. The bigger point is this seems to be a directional bet in terms of where are yields. It doesn't seem like idiosyncratic factors are at play. It doesn't feel like, the numbers don't suggest that this is about a bet on India growth actually picking up, earnings growth starting to move higher substantially, and those kind of things. Not idiosyncratic factors, but a bigger theme at play. And that big theme, of course, is that yields around the world are extremely low. It's a well discussed kind of theme. And in India and other emerging markets, there is still yield to be had. It could be different in different countries. That's another matter. But the directional bet seems to be at least that. I mean, anyway, if you go back in history, Rima, idiosyncratic factors come into play at times of crisis.
Yeah.
Then you stand out. Right now, we're not in any crisis, not just in India, but around the world as well. So right now, more than anything else, more than local factors, is just this bigger global yield hunt at play. I mean,
it's pretty much tying in with even what Mahesh Nandurkar of CLSA said, that the high frequency indicators don't tell you that, don't show you visible signs of growth. It's just easy money which is chasing the emerging markets, and market is moving pretty much in global liquidity, and all the markets are doing well.
That is the point. So a gush of money is coming in and we are getting our share, right?
Yeah.
That's about it. I mean, so it's very easy in a way to kind of explain. There are obviously many factors at play, but at this point, the dominating driver, very clearly looking at these numbers, seems to be flows. And
so many markets have done well. So Brazil is up 21% from its Brexit lows. India is up 8%. Taiwan is up 8%. Russia is up 10%. China is up 10%. All the markets in the emerging market space have done pretty well. But